G'day folks, welcome to this weekend update and specifically where we're going to make some money in the coming week. We didn't have a lot of movement net on the week last week in overseas markets, so a little bit of a pause, but still some very instructive information came out of the week. So let's have a look at the action. Just a reminder, general advice only in this video. So the weekly summary, the S&P index ended up lower by 20 points on the week, but there was a little bit of volatility coming in there. And when you look at the chart, it's really a little bit of a question mark where we go in the very, very short term. I think in the slightly longer term, I'm still pretty confident that the market's heading higher. So to me, it still looks like a pretty stock standard retracement that we've got on our hands at the moment. I'm just not sure whether it's complete or whether we've still got a little bit more downside. I'd put those odds at about 50-50 at the moment. So in the very short term, it's probably not a bad idea not to go in too heavily. Keep some money back in case there's a bit more to go in this correction. The ASX 200 index actually did a lot better than the US, as it seems to be doing of late. It only declined 20 points, whereas you would have expected maybe 3 or 4 times that. So it is starting to outperform most stock markets in recent weeks. Now, the important US dollar index that we'll start off looking at, to me, this is still a counter trend rally. The overall direction is strongly down. It's just sitting currently at first resistance level, and we'll have to see whether there's a little bit more upside in it yet. Bond yields really is a bit of a political guessing game in Europe at the moment, because it just depends on what decisions are being made, and probably even more than that is what the media speculation is about the Spanish bailout. Spanish 10-year yields got down lower than this. They then kicked back up again, but eased back under 6%. It's still high, but it's still not too bad. And the Italian yield's just a fraction over 5% at this stage. So let's have a look at those couple of important charts to start with. This is the US dollar index. You can see we had a very sharp move to the downside, and I believe that the trend is down. We've now had a little bit of a counter trend rally, which is you've got to expect, because you can see the RSI here had got quite oversold on the US dollar. So at the moment it's rebounded to this 38.2% retracement level. Could have a little bit more to go. We could get up to around about just over the 80 mark, which is another 1.2, 1.3 from where it is at the moment. But I think that doesn't change the overall trend. So whatever the US dollar index is heading lower, then obviously commodities will tend to trend higher, and stocks will obviously head in that same direction. Let's have a look at the S&P index now, and we've had a retracement to this support level at 1440. That level is really coming off this peak that we had back here in May of 2008. So that was a pretty important support level. We've come back down. This was the peak as well in March of this year. The peak was at just get this cursor right. Peak was at 1422. So far we've hit a low point of around about 1430. So it's a little unclear whether we've still got a little bit more downside yet, or whether it'll just head higher from here. My gut feeling is there's a little bit more downside yet. I think we might see a few more days of easing into next week. So you can see here on the RSI, it can still unwind a bit yet. So I'd just be keeping your powder dry at this stage, I believe. Now the Aussie index, for what it's worth, because frankly I think this index is there's not a lot of point in really looking at it. It doesn't tell us a great deal. We've got to look at the relative sector strengths, I think, to really understand what's going on. So let's have a look at that. And here's a pretty interesting chart which is showing the Australian sectors. Hopefully you can make this out clearly enough on the slide. We've got the health index at the top, telecoms next, and then we've got industrials and I can't quite make out what that other one is. We've then got the ASX 200, and then below that we've got the energy index and the materials index. So you can see that clearly the strength in our market, if we go back 12 months, has basically been telecom and healthcare very much outperforming the overall index, and we've got finance would be this other one in red, and we've got materials index, of course, doing the worst. So that's really what you need to look at if you want to see what sectors are actually performing in Australia. Now let's have a look at gold. Gold on the week finished flat for the third week in a row. And there's two ways that you can interpret that. I guess you can say it's unable to break higher, but the other way is it doesn't seem to be wanting to come down either. Still just tucked under resistance at 1785, and there is certainly plenty of support. Every time gold dips, the buying seems to come back in. Now, after 3 weeks of pretty flat trading, there'll be a bigger move coming. In the very short term, we could still see a bit more downside yet to maybe 1720, but I'm as good as convinced we'll see $2,000 an ounce fairly soon, and probably before year end. Now, stocks are still outperforming the metal, and we'll have another look at a relative comparison between the metal and the actual international indices. Silver held pretty steady on the week, and it has been outperforming gold, and will continue to outperform gold by quite a margin, I suspect. Now, for all the doom and gloom people that are telling us how bad things are, and I keep reading this content about copper chart looks like breaking down. We'll have a look at the copper chart on the next slide, and I don't know what chart they're looking at, but it doesn't look like it's breaking down to me. Oil held steady. There was a midweek dip to 88, but it did come back to 92 by the end of the week. So this is a copper chart. I can't for the life of me see how that chart's breaking down, so I just pretty much ignore what the people are saying. Doesn't make sense to me. Okay, let's have a look at gold. So this is gold on a weekly chart. You can see we've closed around about this 1770 area now for the third week in a row. I still think around a pullback to maybe 1720-ish is still a possibility, but equally a break above this resistance line is also quite possible as well. Let's look at it on a daily. Gave back a few dollars on Friday night, but overall a pretty positive week. This is silver, also holding its ground very well over the last couple of weeks. Let's have a look at a couple of the international, a couple of the international indices. This is the GDX gold index, so quite clearly there's a strong uptrend in place there. You can see the gap between the moving averages, so quite clearly still tracking higher. The junior gold miners also doing well, and it's probably a little clearer on this HUI index as well. Just the strength of the trend, that's quite a sharp angle. So it's still going very well for those gold stocks. Now let's have a look at the comparative chart between the metal and gold stocks. The metal in green. So this is starting from a common base a year ago, and you can see we opened up some very, very substantial gaps between the two charts. One was in May of this year. There was a huge gap opened up between the performance of the stock and the performance of the metal. We got another really big gap open up in late July, but now you can see it's really closing that gap very rapidly now. So very positive signs for gold stocks at this stage. Okay, so just where do we go from here? The strategy really unchanged from last week. There's nothing much has really occurred to change my view. To me, it's still a case of buying the dips, and most stocks are not really at a point where you want to be buying them. So I'm still looking for a bit of a correction short term, either in the market in general or stocks individually. Obviously, the focus still on gold. There's no question gold stocks are doing the best on the market at the moment. Small caps across the board have got momentum. We're seeing some good returns in copper stocks. Nickel stocks are doing well. And obviously small stocks tend to be more volatile, but the momentum is also very positive. So that's it for this week. As I said, this might be a week of observing, but certainly things going very well, and pretty much the way that the indications have been going for the last couple of months now. So that's it for this week. Cheers.